Welcome back to Indianomics. We've been discussing the first quarter GDP number, which came in at 7.8% versus the Reserve Bank forecast of 8%. I've been speaking with Pranjul, Bhandari of HSBC, Soumyokanti, ghosh of State Bank, and A Prasanna of ICICI Securities primary dealer. Gentlemen, and Pranjul, thanks for waiting on. Prasanna, now for what the other 3 quarters hold for us, we have this El Nino strengthening, and already Q1 is not as good as Reserve Bank's forecast. So do you think Reserve Bank will have to come down from 6.5? And the next question, will you change your GDP number?
Yeah, so RBI clearly has been a bit of an outlier in terms of their forecast. So probably they will have to adjust it. I think not so much for the Q1 data. I think the miss in Q1 data is marginal. It's more about like what you pointed out, both El Nino and maybe even on the global side. I think China data has worsened, for example, I think over the last 1 or 2 months. So I think for those reasons, they might have to change their estimate. Our own senses, we are at 6%. And we have been kind of highlighting that there are downside risks to this estimate. I think we are still sticking to that. At this moment, we are not changing it, but probably we'll also wait for 1 or 2 more months of data and then we'll review it. Again, I think a lot of it depends on agriculture and the global cues. So basis that we will reassess it maybe after a couple of months.
Okay. Soumya, what about you? SBI is also as much an outlier as RBI. If I'm not mistaken, yours was 6.7, if I remember right. Do you think, first of all, Reserve Bank has tightened liquidity. There is that also, which was quite unexpected when all of you were forecasting. And then there is, crude prices probably higher than we all thought, and El Nino. Your thoughts, will 6.7 be tough?
See, Latha, I think as of now, we are sticking to a forecast because I think there is a lot of moving parts to it. Yes, agriculture and El Nino is going to be a threat because our estimates suggest that even if September rainfalls were normal, we'll end the year with a 10% deficit, and if the September actually goes into a deficit, the deficit could be even higher. So that could have an impact on the food prices. So that's the point number one. However, in terms of the growth, Latha, I just want to point out one idiosyncrasies with this GDP data release. I think in the last couple of years, there has been significant revisions in the manufacturing data. Absolutely. So if you look into the last year number, I think the year started with an deficit of a growth rate of -7.7, it moved to 5.8, and after pandemic, I think this uncertainty has eased. Yes. And I think after the last 4 to 5 years. So if I take these factors into consideration, and if I compare the RBI projections and the CSO projections over the last 5 to 6 years, I think the difference is around 20 basis points in terms of the first advance estimates. So from that point of view, I think for the time being, RBI will stick to the forecast, and maybe will take a note of it as the year progresses, because we also need to understand that there could be an impact on consumption as the year progresses and the election starts to get nearer. So that could have an impact on the GDP growth, because the government final consumption expenditure was quite weak in the first quarter with the data released yesterday. Okay.
No, I completely take your point. For the past 2 years, the first advance and second advance estimates, I think FY21 and FY22, the overall GDP was revised higher by some 2 lakh crore. A decent amount in terms of percentage points, I don't remember. But you're right that GDP is a very difficult number to forecast for such a diverse economy, and therefore an upside risk in terms of revision is possible. Pranjul, nevertheless, we have to work with what we have. Would you want to change your numbers? What are they now? I think you're sub 6, right?
Yeah, 5.8% average for FY24, and we are happy to be there. Our sense is that over the second, third, and fourth quarters, the GDP growth number is going to decline. One reason is going to be statistical. The base will normalize. In the first quarter and second quarter, there were low base effects coming from the pandemic. But in the third and fourth quarter, we don't have that same problem. And we've done quarter by quarter analysis on this. So just as the base normalizes going from first half to second half of the year, growth numbers will come off a little bit. That's one. And then the second one is actual growth on the ground. And we think if El Nino indeed does intensify over the next couple of months, we will see a weaker rural growth. I think that is the risk out there. And it could have some spillover into urban as well. So there could be some real softening in GDP growth as well. So we are happy with 5.8%, and we think over time, RBI may have to bring it down as well.
Okay. Yeah, there's quite a bit of difference. Only one of you can be right between 6.5 and 5.8. Prasanna, let's wind down with what do you see as positives? I mean, after all, services exports have done well. We hear of ever more companies trying to do GCCs in India. So that set of jobs are growing anecdotally. Likewise, the PLI for hardware. Hopefully the licensing will be pushed back and we won't have to do that. But nevertheless, that also means a little more investment. If you have to look at hopes on the ground, what would they be?
Yeah, so I mean, you are right. I think on the services side, it's not just services exports. I think even services domestic consumption. I mean, if you look at financial, real estate, and professional services, for example, I think even in trade, hotels, transport, I think there is still a bit of catch up with the pre-pandemic trend. I think, and that can still happen over the coming quarters. So that is definitely a positive. I guess the other positive is I think globally probably at the beginning of this calendar year, it was all looking quite bleak, and maybe that has not kind of come through in terms of a US slowdown. So to the extent that keeps getting postponed, or maybe we'll never get a recession in US, and if that's how it plays out, I think that's also a positive. On the other things like PLI and all, I mean, see, these are all good announcements. I think good starting points. How much of investments come in, and finally how much value added we get, I think those things we have to wait and see. I think that is all probably a 2-3 year kind of view we can take and be positive about it. But for this year, I don't think those things are going to make any difference. I guess what is a negative now, which is agriculture and rainfall, probably even that can be mitigated, I think, to some extent from the government side, if they step up spending on Narega, for example. And anyway, construction sector has been quite strong. So, I mean, a lot of this rural excess labor or whatever can get, and usually that's how it happens. It gets absorbed into urban construction sector. And because of those mitigants, I think even the blow from a weak monsoon may not be as severe as what is looking from the headline numbers. So more or less, I think, I mean, I guess cautiously optimistic, it's a cliche to say it, but I think that's how I would sum it up.
Yes, I mean, at least going by the self-goals that other countries have scored, we look like at least we have not done that. I'm going to ask a surprise question, Soumya. Forgive me for that. In case there is election earlier, in case it is in December, I mean, I don't know what this special parliamentary session in September is supposed to hint at, but if there is an early election, will your growth estimates change at all?
Actually, my guess is as good as yours in terms of what is going to happen.
Yeah, of course. But what does it mean for the economy is all I'm saying. Will it mean, a little more activity, a little more expenditure by everyone and therefore better growth?
Yes, basically what it could mean that it could be more accelerated spending. I think basically the spending which has not happened in the first quarter, so there could be more accelerated spending on the part of the government. And that could actually give an uptick to consumption. This is exactly the point which I mentioned at the beginning of that the first quarter consumption growth also needs to be seen in terms of the statistical impact of the spending on luxury goods.
Okay, fair enough. Just a final question to you, Pranjul. Would you worry that Capex, which has been the strength, could take a back seat? Because, well, even if it's not December, it's going to be an April-May election. Would you worry that that'll take a back seat?
Look, I won't call it a backseat. The truth is, in the first quarter, public capex has been very strong. It's been stronger than anybody would have anticipated. It's not just been the state government, but also the central government. Everybody has been spending. So going into the year, if at some point the focus changes from capex to current for a few months, I think it's all right. I'm not going to worry so much, but yes, I do think that there is going to be some changing of baton from capex to current expenditure. Another reason why I'm not too worried is because I think the stage is set for private capex to come on board. I think we have a lot of futuristic sectors that are taking off. We have clean balance sheets at this point. So my sense is that a couple of months down the line, when the macro economy stabilizes in terms of commodity prices, global growth, my sense is private capex will take off. So, I'm not very worried if the government focuses a little more on current expenditure in the next couple of months.
Oh, absolutely. I mean, the perfect arguments that the Capex cycle should take off. The only negative about this is I heard exactly the same arguments, probably even 18 months back, maybe even 20 months back. But when is it going to start, the private Capex? We hope it starts earlier rather than later. Pranjul, Bhandari, Soumyokanti, ghosh, A Prasanna, thank you very much indeed for joining and for giving us nuances about the economic data, especially the first quarter GDP. Looks like there will have to be a slight reduction in the RBI's forecast. That's it on this edition of Indianomics. Thank you for watching.